well, while that's going on, maybe I can run through a quick intro. So today, your talking rocket is Mav. I'm Rocket Pool's community and marketing manager. And of course, we have, or at least we're trying to get on, a very special guest today. And it is none other than Justin Drake. If you're not aware, Justin is a very prominent Ethereum researcher. And if you frequent CT or crypto Twitter, you've probably, well, there's a good chance that you've seen the ultrasound emojis, a bat and a speaker. What this really means, the ultrasound meme, as it were, if the second best orange coin out there is called sound money because it has a fixed cap supply at 21 million, then Ethereum must be ultrasound money because it can have a decreasing supply. So it was actually none other than Justin who helped to create the meme a couple years ago now, and I believe it was our friends at Bankless who kind of had a helping hand in spreading it and making it as popular as it is today. And of course, it's much more than a meme now. It's a website, ultrasound.money, and if you head over there, you'll see that it tracks all sorts of interesting Ethereum metrics, including one that a lot of us watch quite closely, and that is the post-merge supply change. And I checked it a little bit earlier this morning. It's probably a good time to have Justin on because we were closing in on about 1,000 ETH burn since then, since the merge. And that might not seem a lot, but of course we have to remember that the merge has prevented somewhere in the region of 1.5 million new ETH from being issued. And the website's great, but now the ultrasound meme has grown even larger, and we have the ultrasound relay, and that is an option for Rocket Pool's permissionless node operators to select from. And of course, as well as Justin, who I can see is now up here as a speaker. For those of you who don't know Langers, Langers is Rocket Pool's GM. That doesn't stand for good morning, but for general manager. And it's very early for him across the ditch in Australia at 5 a.m. He's joined us to have a chat with Justin. So with that, and aware that we have started a little bit late due to the technical difficulties that seem to crop up maybe a little more often than they should with these Twitter spaces, I'll hand it over to Langers, and after we'll try and speed run the Biweekly, depending on how much time we have left. Ken and or Jasper, our community advocates, may join for that. Of course, that had to be our largest Biweekly update to date, but we'll see how we go. Langers and Justin, over to you.
Good morning. Thank you. Thanks, Mav. So a special welcome to Justin Drake. As Mav said, Justin is a prominent researcher with the Ethereum Foundation, and also I would kind of say probably one of the most effective communicators of the Ethereum roadmap as well. Welcome, Justin.
Hi there. Thanks for having me, and good morning. And sorry for messing up. I think I couldn't join the space from Google Chrome or something, so I'm on my phone now. Thanks for bearing with me.
All good. That is a trick for new players. So as Mav said, Rocket Pool has kind of recently integrated the kind of ultrasound relay into the smart node package, which is very exciting. From our perspective, we want to kind of give our node operators the widest choice of MEV relays, so that they can kind of tailor their comfort, particularly making it suitable for their kind of jurisdiction and that sort of thing. How did you kind of get involved in the ultrasound relay, and maybe tell us a little bit about it if you can?
Yeah, sure. So, I mean, I'm part of the team behind the ultrasound.money website. There's 4 of us now, and one of the things that we've been trying to do as a mission is create shelling points, right? We want people to understand Ether, the asset, and Ethereum, and through this appreciation, kind of create a shelling point where people say, aha, Ethereum is the place to be. Ether is the asset to have. And when you create these shelling points, they become very powerful because you create network effects. And you create things like monetary premium. And one of the things that we observed is that there was an anti-shelling point, if you will, that was fighting the shelling points that we were trying to promote, and that was around censorship resistance. So, as you probably know, there's this situation around OFAC, which has put the Tornado Cash contracts on this sanctions list. And what has happened is that some parts of the MEV pipeline, have basically decided to comply with this sanctions list, or at least comply with their interpretation of compliance. And one of the most striking things that we've seen is that at the relay level, the relays are intermediaries between the builders and the proposers, we've seen a huge amount of censorship. And the reason is because there's a huge amount of centralization. So it turned out that when the merge happened, there was basically, roughly speaking, one relay, one very dominant relay, which is the Flashbots relay. And the Flashbots team has decided that they wanted to censor transactions. And we were hoping that various brands out there would spin up a relay, because really running a relay shouldn't be too difficult, and it's permissionless. All you really need is a little bit of DevOps expertise, a little bit of money, but most importantly, you need reputation. And so we were hoping that brands like Etherscan or Ledger or I don't know, all sorts of players in the space, maybe Rocket Pool even could run a relay, would spin up relays, but it just didn't really happen organically. And so we said, okay, if no one else is going to build these relays, maybe we should. And we have a little bit of reputation behind the ultrasound brand. And so we started this ultrasound relay. And the mission here really is to improve the diversity and more specifically improve the censorship resistance profile at the relay level. And so we're hoping that within a few weeks, the majority of of blocks that are included on Ethereum will go through non-censoring relays or go through no relay whatsoever, basically being self-built by the validators from the mempool. And this has been a learning process in the last 2 months. We've been collaborating with Gnosis, who also have a relay, the agnostic relay. And we're at a point where we're starting to get a lot of traction from the builder side of things, and more validators connecting to those relays. So there's about 15% of validators that are connected to these two non-censoring relays. And I expect that to grow dramatically in the weeks and months to come.
Yeah, that's fantastic. So yeah, there's certainly a lot of graphs on Twitter around the number of blocks that were being censored, and I think with the progress that you guys have made, and Gnosis and a few other players in the space as well, that is starting to recede. So I think we kind of had a peak censorship, and hopefully that's coming down a bit as well now. So that's fantastic. Actually, the Gnosis one is on our list, so they'll probably be one of the next ones to be integrated as well. So that's going to be fantastic. And actually, we were approached about doing a relay. I think we spoke to the Prismatic guys a little while ago, and they said, "Well, why don't you guys run a relay?" We considered it, but the issue there is being kind of like first of all, we're trying to be like an agnostic protocol. So that's one sense. But the other thing is, having control over the relay, and I wouldn't say having control. We don't have our control over our validators, but even at a perceived level, we decided kind of not to. But I'm glad that other people in the space are taking up the reins and improving that situation. So in terms of, that's like kind of censorship today. But what about in the future? There's some stuff in the Ethereum roadmap in terms of censorship?
There's a ton of stuff in the roadmap regarding censorship. So there's a whole new section in Vitalik's roadmap graphic, which is called the Scourge. And it basically goes through the big ideas that we have at a research level to effectively eradicate censorship at the protocol level. So there's various places where censorship can creep in. And the three major ones are the relay level, there's the proposer level, and there's the builder level. And for each of these sections of the MEV pipeline, of the MEV supply chain, we have a different solution. So I'm happy to go through them one by one real quick. So for the relays, we have something called enshrined proposer-builder separation. It's basically a mechanism to remove the need for relays. There just won't be any more relays once we have enshrined proposer-builder separation. And this is a great thing. As a relay operator, I don't want us to exist in the long term. The way that we address builder censorship is through this idea of inclusion lists. And the way that I think about it is that inclusion list means that there's 2 blocks for every slot. There's a template block, which is provided by the proposer, and that template block can be built extremely naively just from the mempool. It's basically a list of transactions that the proposer thinks should go in the next block. And then there's the actual winning block, which is crafted with a lot of MEV expertise by the builder. But the builder has a constraint, which is that he needs to include the transactions from the template block. So he can do all sorts of sophisticated things like reordering transactions or inserting transactions to do sandwiches and arbitrage and whatnot. But he needs to also include the transactions in the template. And so you kind of remove the opportunity for builders to censor. And then there's the final place where censorship can creep in, which is at the proposer layer. And basically, the reason why there's a censorship opportunity is because whoever is the proposer for a given slot has monopolistic power over that slot. They're like the dictator for these 12 seconds, and they have full discretion in terms of what block they can choose to include. And the idea here is to basically restrict the choice that they can make to a single block. So you can think of it as a canonical choice for block selection. And that's basically one of the features of MEV burn, which says that when you select a block as a proposer, you need to pick the highest paying block, the one with the most MEV. And because you only have this one choice as to which block you can include, you lose your power to do censorship as a proposer. And as a byproduct of that, which is kind of nice, is that you burn the MEV. And this MEV burn is actually especially relevant for Rocket Pool. And the reason is that, like, fundamentally, all the liquid staking derivatives, they have this problem around MEV, which is that you have operators that receive MEV, and the honest behavior is for that MEV to go in some sort of smoothing pool. But what if there's a spike of MEV? What if there's suddenly a block or a slot which is worth, I don't know, let's say 1,000 ETH? Well, that proposer kind of doesn't have an incentive to take the 1,000 ETH and put it into the smoothing pool. They have an incentive to take it for themselves and run away, even if they lose a little bit of collateral. And so really we want to have a way to address that. And like the most effective way that I know, if not the only way that kind of really works, is this idea of MEV burn, where you remove those spikes, and so you make it in such a way that everyone gets the same APR, without the ability for attackers to kind of farm for MEV spikes by, launching a lot of mini pools, and then as soon as they win the lottery, they just run away like a bandit.
Yeah, that has been a an issue that we have discussed ad nauseum. It also kind of has some downstream effects as well, because it's mainly around how do you punish that behavior, or we tried looking at ways of incentivizing around it, and there's not really anything you can do around that. And because those lottery blocks are can be so huge, there is no defense. There's no penalization that you can do currently with the way that Ethereum works, that can do it. The only way that we would be able to do it is to make sure that forced exits were in place. So but no, that's fantastic. That actually solves a lot of issues for us going forward. And it actually means that that MEV problem was one of the sticking points around dropping our collateral level, because we have to have a certain amount of, punishment collateral to avoid that situation. So yeah, no, that's fantastic. So actually, I mean, so playing kind of devil's advocate, why is censorship such a big problem? How does it kind of affect Ethereum's future?
Right. So I think one of the most important selling points that we want to manufacture in Ethereum is this idea of credible neutrality. Like, we want to build infrastructure that anyone can use for any kind of application. And really, the way that I think about it is that there's three pillars to credible neutrality. The first one is this idea of full programmability, right? This Turing completeness. This idea that, like, in theory, you can just build whatever application you want. The only limit is your imagination. And we have that with Ethereum, and it's a big differentiator with Bitcoin, for example. The second important pillar of credible neutrality is kind of a counterintuitive one, but it's scalability. And the reason scalability is so important is because it means that anyone in the world can participate without creating this differentiation between the rich that can afford the transaction fees and the poor that can't afford the transaction fees. And it also opens up the full gamut of applications, right? Because if we don't have scalability, only the most valuable applications will go on Ethereum, and that might only be financial applications. But really, once we open things up, Ethereum becomes a credible platform for anything, for identity, for reputation, for marketplaces, for all sorts of things. And then the final key pillar of credible neutrality is this idea of censorship resistance, which is that Ethereum just doesn't discriminate inclusion of transactions based on their content. It doesn't matter if the transaction touches certain addresses. It doesn't matter if it touches certain contracts or it behaves in a certain way. Every transaction is kind of treated equal so long as they pay for the base fee. And one of the things that is a little bit counterintuitive is that there's two aspects to censorship resistance. There's the fundamentals of censorship resistance and the perceived censorship resistance. And this whole story around OFAC and Tornado Cash has been a massive hit to perceived censorship resistance, despite the fact that the fundamentals of censorship resistance are still extremely strong. Now, let me explain this very briefly. Even though 80%, let's say, of the blocks go through a censoring relay, that doesn't mean that transactions can't get into Ethereum. Even Tornado Cash transactions do eventually get into Ethereum, but there is this additional delay, and it's on the order of 1 minute. Now, it turns out that there are very, very few Tornado Cash transactions every single day, on the order of roughly 100 transactions. And so what we're talking about is 100 transactions that have to wait roughly 5 times longer than the usual block time. So they have to wait roughly 1 minute instead of the 12 seconds. And as someone who cares about censorship resistance, I think you can appreciate that having your transaction going in the blockchain within the minute is actually not a big deal. But what we've seen is that purely from a narrative standpoint, from a meme standpoint, from a PR standpoint, it's been a massive hit to Ethereum, because the media, Bitcoin maxis, critics of Ethereum just can use that as clickbaity headline and miss the subtleties. And so this is why we came in, and by we I mean the ultrasound money team, is because we in a way are trying to push the meme layer, the narrative layer, with infrastructure and with numbers and education. And so it was kind of a perfect fit for us to say, what, it's actually much easier to change the status quo so that there's very, very few blocks that go through censoring relays than it is to go educate all these critics and all these journalists about the real situation. And not only is it easier, but it also has these beneficial aspects to it in terms of fundamentals, which is that we remove this delay for censored transactions. And today it might only be 100 transactions per day that are being censored, but in the future maybe there's going to be many more. There could be hundreds of thousands of censored transactions, and that would look much worse for Ethereum if that were the case. So it's something that we want to address early. We can address it in the long term and try and build a separation, but we can also address it in the short term. And I believe that within the next few weeks, it will largely be a solved problem.
Great to hear. Very good. Looking forward to that. So I guess this is probably an obvious question, but so Rocket Pool has this kind of close to 2,000 node operators who kind of care deeply about Ethereum. So what can they do to contribute to Ethereum's kind of credible neutrality?
Right. So Rocket Pool, in my opinion, has been doing kind of a great job on multiple fronts. Like, they've been big proponents of client diversity, and also big proponents of relay diversity. And as you said, you want to give your operators the option to pick whatever relay they want to connect to. And one of the great things is that each individual operator is making their own decisions in terms of which consensus client they run, which execution client they run, and which relay they run. But they also have choices beyond that, around whether they stake from home, whether they stake in a cloud provider, and if they do stake with a cloud provider, where do they stake? Now, one of the things that we've observed, a few months ago, is that if you were going to stake on a cloud provider, like, most of the validators would pick AWS. So one of the things that you could do if you're running on AWS right now is just move away from AWS, and even better, kind of run from home. I think another thing that the Rocket Pool community can do, beyond kind of improving the decentralization of the operators and the nodes, is to kind of look into the future and try and pick and choose some of the items in the roadmap that are very aligned with Rocket Pool, and try and push them forward from a research and development perspective. Now, we've seen this, for example, with EIP 4844, right? There's been all sorts of aligned players, mostly roll-up projects like Optimism and others, who have been doing some development to push things forward. And I think there's multiple items in the roadmap that are relevant for Rocket Pool. One obviously is withdrawals. Another one is forced exit, and then the third one that comes to mind is MEV burn. And I think it would be great for Rocket Pool to have a voice kind of at the research level. And actually, one of the things that happened a few weeks ago is that I joined the Rocket Pool Discord just to talk about the ultrasound relay and to thank the community for connecting to it so swiftly. And that kind of led to a discussion around MEV burn, and this discussion was extremely sophisticated. There was all sorts of points and questions that were raised, exactly the kind of questions that would be are valuable for researchers and for implementers to take into consideration to improve the designs that we have.
Yeah, I'll say that I'm not kind of I'm not exaggerating when I say that our community is a massive research body for us in terms of they do kind of analysis, they do a lot of kind of collecting information across the ecosystem, they distill it down, and there's a lot of really great opinions and ideas that come out of, well, I would say most of the great ideas come from the community. So it's definitely our community are sophisticated in the sense that they understand a lot of these topics, and they really do care about these topics as well. So it's really great, and they kind of drive us forward as well. So maybe we'll kind of I think we've touched on credible neutrality really well now. So maybe let's move to kind of like liquid staking tokens in kind of general. So the interest in liquid staking tokens has certainly been incredible. It surprised me, even me being in it. It certainly surprised me. And so particularly since the merge, but also with Shanghai and withdrawals approaching, this interest is getting larger and larger, which is great for us, obviously. So what are your thoughts on the liquid staking market, and how do you kind of see the future of liquid staking?
Right. So I've also been surprised at how popular liquid staking tokens have been. I think one of the big tailwinds that you guys have had is the fact that if you were to stake as an independent solo validator, then your tokens would be illiquid. And so one of the big use cases of using Rocket Pool today is that you have liquidity on your tokens. And so it's kind of a little counterintuitive, but it's possible that withdrawals will actually be a headwind going forward for liquid staking tokens, because now you lose this immediate liquidity that as a selling point. Having said that, I still think that liquid staking tokens are going to be very successful, and I think what is important to do is to kind of flesh out the various use cases. Now, I think use case number one is still going to be related to liquidity, and the reason is that even when withdrawals are activated, you're going to have to go through the so-called exit queue, and this exit queue can be rather short, and it might take only a few hours for you to exit. But in some cases, it could be rather long, on the order of days and weeks, and in extreme situations, even months. And so if you want to have these hard guarantees that you want to have liquidity over your assets extremely quickly, then I think that's going to be a use case for liquid staking derivatives. But I'm hopeful that for many people, having access to your liquidity on the order of hours, maybe on the order of days, and in extreme situations on the order of weeks, is good enough so that people will not be scared to validate as a solo validator from home. I think another kind of use case of these tokens is kind of leverage staking, and that's an interesting use case. I don't know how much leverage staking there has been on Rocket Pool, but I kind of foresee maybe some degens out there kind of really taking a lot of leverage on the staking, and that actually might be a reasonable thing to do, in the sense that as these liquid staking tokens kind of mature, then they should stay relatively close to their peg, and so taking leverage is actually not too risky. I think we need to, as a community, basically understand very precisely what the risks are with these liquid staking tokens, so that an appropriate amount of leverage can be taken. And I think one thing that could be helpful is basically, and it's probably already been done, is to have some sort of report on a regular basis, let's say every 6 months or whatever, that highlights all the risks and how over time, as these projects mature, the risks go down and down and down. And then I think one of the final use cases potentially is for these liquid staking tokens to be used as collateral in DeFi and within the ecosystem. Now, I think there's potential here, but it's kind of similar to the leverage staking. You really want to try and understand the risks, because what could happen in theory, in the worst case, is that the derivative is just worth nothing from one day to another, and as such, there's going to be, in my opinion, a very significant gap between just plain ETH and these derivatives, because plain ETH is the only truly kind of pristine asset. But as these derivatives mature over time, I think the risks can be driven down to some sort of equilibrium point where it can't be squeezed down any further. Now, there's some things that I think, some categories of risk that I think can be brought down to essentially zero. So one good example here would be contract risk, right? Over time, with Lindy and with tools like formal verification, you can basically have mathematical proofs that your contracts behave as you expect and that there are no bugs. And so in terms of fundamentals, I expect contract risk to go down to zero over time. Another exciting thing is that I think governance risks will go down to zero over time, largely because as these projects mature and as the layer one is more and more powerful, the need for governance will go down more and more and more. And one example here is around MEV. Like if MEV burn, if you don't have MEV burn, then you kind of need governance to step in and penalize some parties and act as MEV oracles and whatnot. And as we remove these edge cases, the need for governance goes down. And I think Lido has kind of also kind of something very interesting, which what people may also have, around this idea of the holders of the derivative to be able to veto some of the governance proposals that are made by the governance token. Now, the one of the open questions that is in my mind is: Are we going to be able to completely reduce all the risks? And it seems that it's unknown. I think it's going to be difficult, but I don't want to completely shut off the possibility in my mind that this could happen. Like one of the things that I understand from Rocket Pool is that you guys need an ETH to LDO oracle, or some sort of price oracle, and maybe this can be effectively decentralized to a large extent with projects like EigenLayer, for example, that can provide fairly decentralized oracles. But then the question becomes, how far we can push the maturity and remove the risks.
Yeah, some really great points there. So with the leverage stuff and the kind of hyper staking sort of things, I think we were quite lucky in the sense that we were still building kind of our integrations as the 3 arrows stuff kicked off. So we kind of got to see how that played out. Now, what's happening with Rocket Pool or rETH today is that we've just submitted like an Aave proposal. So that's now going through, and we should kind of have everything we need in terms of getting into Aave. So that will kind of enable, I guess, that integration and the use of leverage in that sense. One of the great things is that I think we're going into Aave v3, and Aave v3, as far as I'm aware, has kind of like these debt limits, which I think v2 didn't really kind of have. It had some parameters and that sort of thing to kind of control things, but it didn't necessarily have hard limits. So I think one of the things that the debt markets are very aware of are those kind of structural things that they have in place to make sure that you don't cause these ripple effects across the ecosystem, which is fantastic. So it means that hopefully we're going into a kind of environment that's a bit more structured, which means that we don't have those ripple effects as much, which is great. In terms of kind of governance and that sort of thing, yeah, I think with us, we need to have some form of governance because of for a few different reasons, but one of the main reasons is because we sit on top of Ethereum, and Ethereum itself is changing, and then we need to change. So if Ethereum starts to kind of solidify, then we can probably start solidifying as well. So that'll be fantastic. Decentralized oracles are definitely a problem, I think, across DeFi, and so I really do hope that we can kind of have some better kind of more wide ranging, some more competitors in the space, and kind of better decentralized oracles. I think with us, we have the problem of first of all, we have the problem of the RPL price, which we need, but also we have the fact that the Beacon chain and the Ethereum chain are two separate chains, and we've definitely kind of engaged Alex Stokes and a few people on the whole kind of Beacon chain or Beacon route information and that sort of thing. So yes, we're definitely engaging at the research level. DevCon was actually great for us because we got to reconnect with a lot of researchers. I didn't get to connect with you, unfortunately, but we did catch up with a lot of researchers and had a really great chat with them about the different things in the roadmap that are kind of relevant to Rocket Pool. So that's great. So I think we're kind of running low on time, but maybe what we'll do is actually, I mean, there's one question I wouldn't mind throwing in. It's kind of related. This one's actually a community question. There's a whole bunch of community questions which I think we're going to struggle to kind of get through. But one of them was around if you see any kind of perceived risks around the proliferation of kind of liquid staking tokens and that sort of thing.
Right, interesting. I mean, just going back to the previous question, I think because staking is going to become a trillion-dollar industry or even a multi-trillion-dollar industry, we do need to start thinking about these risks, and there's all sorts of them. I think there's like attacks on individual liquid staking tokens, and I think as a researcher, I'm not too worried about that. I'm more worried about things like systemic risk. But I do want to highlight one particular attack on liquid staking tokens, which I'm hoping will never happen, but could happen. And it's this it's a ransom attack. So the idea of the ransom attack is that some attacker takes control over many validators in some way or another. They have access to the staking keys, and not necessarily the withdrawal keys, only the staking keys. And then basically what they can do is they can prove to the community that they hold all these staking keys, and they can say to the community, unless you pay me a ransom, I'm just going to slash all these validators. And the game theory basically says that as the victim of this ransom attack, you should pay the ransom because it's in your interest, and the attacker can set everything up trustlessly with smart contracts in such a way that the game theory really is for the victim to pay the ransom. And so you can think of that as basically as a way to bypass the segregation of the withdrawal key. Right? The idea of the withdrawal key is that it's some sort of key that's kept in cold storage or maybe controlled by a smart contract, which a governance token has control over. But there's this very insidious ransom attack going on, and I think that's one of the reasons why you don't want to bring the amount of collateral that you need to spin up a mini pool too low, because then you're just making this ransom attack much easier to pull off. And like one of the things that I think might happen, and I think the centralized pools are more exposed to this attack is basically some sort of inside job. So imagine a large pool. Maybe you can think of Coinbase as being a pool. If one of the sysadmins of Coinbase who has access to the staking keys of 10% of the validators, then they can basically hold at ransom roughly one third of the stake of these validators, which we're talking about billions of dollars. It would potentially be one of the largest hacks in the history of crypto, and maybe even in the history of the world. And so as we project ourselves into this multi-trillion-dollar staking industry, we really want to take these kind of attacks seriously. And one of the things that I've been working on is this idea of anti-slashing protection using SGX. So and one of the great things here is that it can benefit all the stakers, the centralized ones, but also the more decentralized staking initiatives. And the idea here is that you basically hold your staking keys in a trusted enclave, for example, SGX by Intel, where you have the guarantee that you will never do you will never be slashed. So basically, the enclave does, for example, double vote protection. It will never vote two attestations which have the same slot. And it can also do surround vote protection basically by keeping track of the previous attestation that it voted. There's actually a project out there called Puffer, which is maybe a competitor to Rocket Pool, but they're building infrastructure to this SGX infrastructure that anyone can reuse. And this is one of the wonderful things about our space, is that competitors are actually collaborators and building infrastructure for each other. And I think that's going back to your previous question. One of the things that we're going to see is a proliferation of different competing projects. So there's Puffer, as I mentioned, but there's also Swell and various others that are going to be trying to bring new ideas into the space. Now, in terms of the systemic risks, I think the biggest one is around the use of liquid staking derivatives as collateral in DeFi. And the reason is that, as I said before, like from one day to another, your derivative could have a massive haircut. It could lose half its value. It could lose even 100% of its value. And this is not a feature that you want as a collateral asset. And there's some proponents, for example, Hasu, right, who would love to see all the ETH supply going through Lido, so that you have this one kind of master liquid staking derivative that is basically a replacement for ETH, and you kind of get the best of both worlds. On the one hand, you get the massive network effects and liquidity of ETH as they are today, and in addition to that, you get the staking yield. But this is a vision that I really don't align with, and the reason is that you lose the pristine the pristineness of Ether as a collateral asset. And what that means is that from one day to another, there could be some sort of bug or governance vote or some sort of massive slashing event or whatever it is, and that could take down the internet of value, right? Because what is our mission for Ethereum? The mission is trying to be a settlement layer for the internet of value, basically a settlement layer for on the order of $1 quadrillion, a massive amount of value that is being secured, and part of that is going to be secured through collateral. And so we really want to be using the highest grade of collateral that we can. Otherwise, we're kind of risking the integrity of the financial system of the world, which we want to be built on top of Ethereum. So that would be the main systemic risk that I would want to avoid. I mean, there's other things that people are worried about. For example, collusion around MEV doing these reorgs, and collusion from a perspective of censorship. But one of the great things that we've learned recently is that we can completely solve the censorship problem, and we can also completely solve the MEV problem. So we have things like single slot finality, which basically removes the opportunity to do these reorgs. And we have things like MEV burn that removes the incentives to do reorgs in the first place, because you remove these big spikes of MEV that could incentivize colluding parties to revert the chain in such a way that they farm the spikes instead of someone else.
Yeah, the collateral kind of aspect is something that we've kind of thought about a lot. Actually, Ken, who's in this Twitter space, who's one of our rocket scientists, he has done a very important kind of analysis piece on what collateral requirements we need to kind of meet those obligations. So we've kind of spent quite a lot of time analyzing, how we can be the most solid asset that we possibly can. So that's we've kind of got that analysis, and we're kind of working towards that. I mean, we're very, very comfortable with the 8 ETH collateral, which is what we're going to roll out with Atlas. We're kind of reviewing the 4 ETH as well, and so that's where we're kind of targeting is kind of a 4 ETH mini pool or 4 ETH validator. So that's where we're kind of aiming for, but we're going to do a little bit more analysis around 4 ETH to kind of make sure that that's as solid as possible. The idea there is obviously to balance out our kind of scalability, so that we can kind of scale and provide that capacity for the asset, but also to make sure that we give our ETH holders the most solid asset that's kind of possible. So centralized providers certainly do have a few problems.
A very quick comment on scalability. So let's assume that you reach 10% of market share, and you can ask yourself, okay, how can we scale? Well, option number one is just to have more of the total staking pie. Now the thing is that you don't want to grow too large, because then your systemic risks kind of blow up, and your correlation failures blow up. So let's say you can grow safely all the way up to 20%. That's kind of a 2x opportunity. And so in a way, like by trying to grow your share of the staking pie, there isn't that much growth opportunity. But if you think about growing the value of ETH itself, there's the sky's the limit. There's basically a 100x opportunity there. Like Ether, is roughly $1,000 today. It could be 100 times larger, in 10 to 20 years, if the vision plays out that Ether becomes the pristine collateral for the Internet of Value. And so when you think of scalability, I kind of encourage you to think in this in kind of scaling the ETH token itself, instead of necessarily kind of scaling the fraction of the pie that you have within the staking environment, because by at least an order of magnitude, the scaling opportunity is much greater when you're working on ETH. And I think that's one of the big selling points of Rocket Pool, is that you're so aligned, with the community and the culture. You're pushing for client and relay diversity. You're pushing for operating from home and staking from home, and this potentially has a much greater impact than grabbing a big share of the market.
So we've actually, with the kind of capacity or elements, so we've made a kind of a commitment, or the core team have made a commitment in terms of self-limiting when we get to a certain point. And the community actually very recently, Valdorf has kind of submitted like an improvement proposal which kind of formalizes that self-limiting. So I think that will go to vote at some point very, very soon. So that's an important step, because it enshrines in the Rocket Pool protocol that we will self-limit, and I think it sets maybe we'll set the kind of limits in terms of when we'll actually start doing that as well. So that's a great effort from Valdorf and the rest of the community in terms of putting that together and making sure that we adhere to that promise. So that's great. And in terms of ETH, I mean, I think the most that we can do is give more and more utility to ETH, and I think with kind of that the staking yield and that sort of thing, that certainly kind of helps there. And particularly, there's a whole heap of new products and that sort of thing being built on top of liquid staking tokens. So that's a really exciting area that I think will kind of add more and more into the space. I think we're pretty much there now. I will probably I'll say a big thank you to Justin, and I might pass it over to Mav in a minute. But big thank you, Justin. Thank you very much for joining us, and it's been really informative and really it's been fun chatting to you.
Thanks for having me. I really enjoyed it as well. Thanks.
Well, I don't know about you guys, but just had to take a couple of deep breaths to calm down a little bit. It's a very exciting call, that's for sure. And I think I saw around 130 people in the audience, so a great turnout as well. I honestly think just with the kind of simple topics, as it were, we probably could have gone for another hour, let alone got through all of the community questions. But Justin was kind enough to join us relatively late in his day over on the other side of the world. So we probably shouldn't keep him from his important work for too much longer. We will quickly run through the bi-weekly topics, aware that we're now already just over the hour. So I'll try to keep it brief. Of course, if you miss anything or you want to listen to this call with Justin again, which I probably will more than once, we will make it available on YouTube later in the week. So without any further ado, I will bring up the bi-weekly and we'll run through a few numbers. See, we've got Ken up here on the stage as well. Welcome, Ken. Great to hear a shout out for you and the rocket scientists earlier in the call.
Yeah, great call and great job to Langers. I don't know if people knew he was kind of fighting a little bit of a head cold during the call, but I just thought answered the excellent questions and kept it very much on topic. It was excellent.
Thanks, Ken.
Okay, so I think what we'll do is I will just run through the most important topics, and maybe there's a couple of them as we go through that we can pass over to you, Ken, if you had a couple of thoughts on that. Starting off with, as we usually do, the headline growth figures, which are very impressive. And it looks like they're up quite significantly from the past bi-weekly. Of course, that was kind of through the holiday period, so to a certain extent, that is to be expected. But also, you will probably be aware of the attention that LST protocols have been getting on Twitter. It's been all go for the past 2 weeks, that's for sure. And it's great to see we've got, on an annualized basis, both the rETH supply, the mini pool count, and the node operator count all up above 100%. Obviously, what that means is if you project forwards a year, we should see those figures double at their current rate. Important to keep in mind the context that this is obviously with our 16 ETH mini pool setup, and we expect the Atlas upgrade to not only result in a kind of one-time instant jump in terms of the number of mini pools and the rETH supply, not the node operator side, of course, but with that lower barrier to entry, we should see kind of the longer term growth rate of these metrics pick up as well. So very exciting times ahead. Don't know if you had any comments to add on that one, Ken.
No, I think you covered it well. The one thing I'd be kind of curious of, Mav, is with the lead up here to the merge, you think these numbers are sustainable? When do you think it peaks? Have we just started the run on LSD and growth, or do we have a little bit of a runway here?
Well, I think, like it or not, the growth is probably correlated to certain other numbers going up in terms of the price of ETH and the flow on effect in terms of kind of the attention that ETH staking is getting on Twitter and various social media platforms. So that will no doubt be a factor. I'm certainly not qualified to comment with regards to the price situation, at least on the the social side and the coverage that ETH staking is getting, it seems like maybe the attention has simmered down a little bit. But if we think about kind of between now and Shanghai, the catalysts that we'll have coming up, eventually we'll probably get a date for withdrawals, and then Rocket Pool itself having the Atlas upgrade, and another couple of bits and pieces that we're working on. I think it's sustainable in this region. Remains to be seen. We'll obviously have some fluctuations. One important point that I didn't mention is pretty sure the Rocket Arb smart contract will be playing an important point here. It is a very useful catalyst to kind of push people into setting up a mini pool. Of course, if it's your first time as a node operator, when that ARB is high enough, the funds may be sufficient to pay for all of your hardware, which is a nice little bonus. And if we jump across to Smart Node is up next, and this is probably an area where you can help us out, Ken. I see Joe just waited until I got the Biweekly out to update 1.7.3. Aside from that, there is ongoing work for Smart Node integration regarding Atlas. Did you have any points to add on the latest Smart Node, Ken?
Yeah, I think for those that are running Lighthouse, definitely the small update of 1.73 is worth the effort. If you're not on Lighthouse, maybe do your research, and you might maybe wait on the update. I think we're looking forward to 1.8 because it's going to have a couple of key features. First and foremost is probably the introduction of a Lodestar in terms of our client diversity. We heard Justin mention that and the importance that we bring to that, as well as a neat feature for those that are running Nimbus is the split mode that separates the validator from the ETH2 client. So that would allow us to use fallback support for those that are on Nimbus. And so that's going to be an important upgrade. And the one other thing I would include in Smart Node that's not in here is if you're listening to this call, definitely find an old computer and fire up a Grilly Prater, I think it's probably going to be, but fire up a test node because we got to be getting pretty close to testing Atlas on the public test net. So be part of that to help ensure Atlas's success.
And with that, I will jump forward to kind of halfway through the R&D section, and some great news on the Atlas front. We've got CD, Consensus Diligence. They've started their prep work for the second Atlas audit. So this will commence at kind of full speed next week. But right now they're just busy gathering all the information, making sure they're looking in all the right places. So probably by the time we have the next bi-weekly update out, we should have some further details with regards to the Atlas protocol rollout. Obviously, timelines and the like are dependent on audit results, but based on the pretty good outcome from the first round, we can be fairly confident that Atlas is in a good spot. And for those of you who in the community have been providing feedback on some of the Rocket Pool, I suppose, front-end website branding, you'll be pleased to know that a rather comprehensive refresh has commenced. Important to clarify here that this is more, I suppose, a design focused refresh rather than the brand. Excuse me. Most importantly, the website is going to move away from the existing kind of single page scroll setup to one where we have multiple landing pages. And one area that's particularly important is looking at potential migrations over to Rocket Pool once withdrawals are live. So we want a nice, easy, convenient place to be able to direct people who want to know more about Rocket Pool and to have it tailored to their kind of higher level of knowledge and experience that they'd have if they're already running a node elsewhere.
Hey, Mav, can I just ask you some questions on that? Because it's kind of a very interesting point for the community, right? I guess, and maybe you can just help rephrase or clarify some stuff. So you said it's a refresh to the website. Two questions that come to mind. Does it include any update or refresh to the branding? I mean, obviously, we all love our orange, but it sounded like there might be some logo or branding opportunities. And then any thought yet about how to allow more community contributions to the website, yet still maintaining the security of the closed website for spoofing attacks? Is that part of that, or am I jumping ahead?
So this is mostly a design as in like structure and layout update rather than branding. Of course, with the new layout, the branding as it's applied will appear different. So we're looking to move towards, I'd probably say, a tighter look than the current setup. We are very early stages, kind of sketching out thoughts. So there's not a whole lot to kind of share in terms of specifics, but in terms of the orange color, certainly based on the number of or the amount of orange printing that Joe's been doing lately, it still seems to remain popular. But to your question of the community's input, we are taking the community's input on board when it comes to this work. So that's something worth noting. The closed source aspect of the website has come up a few times on these calls, and the position kind of remains the same, that we're focusing on this redesign, restructure on the website, and that we don't want to have to deal with the increased amount of fake websites that would crop up if it was fully open sourced. I mean, this is not a kind of end of discussion point. I'm sure it will come up again in the future, and it may very well be the case that at some point it makes sense to move towards that. But certainly we've taken on feedback we've received so far when we're looking at how the website might look going forwards. With regards to the logo, the orange rocket logo that we all know, which is also the RPL logo, is unchanging. But we're seeing what we can do with the kind of larger horizontal layout logo that's at the top of the web page, to see if we can make any tweaks to that at all. So that is something that's being investigated. The primary goal, though, is mostly on like communicating information about the protocol, to make sure that we have areas where we can direct people and kind of segment out the potential audiences a little bit more. Part of this is also involved with the LSD and DeFi side of things, so more clearly communicating the ecosystem that Rocket Pool is operating within, and the kind of opportunities that are available, and the different protocols that we're collaborating with. So again, early stages on this. It's not a one and done, but we are aware of withdrawals, and that's kind of meant that looking forwards to that date, the work has to be kind of scoped accordingly, so that we're in a good position once we reach that point, that we're not bogged down in picking a slightly different shade of orange, but that we're working on areas that have the most impact, right, which is communicating the information. So hopefully that answers the question. But of course, there's always room to bring up this discussion again, and to look at kind of further work in the future down the track.
Yeah,
and
no, that's great to hear, because the one thing I know about this community is the only thing that we love more than POOPs is talking about the design, the color, and the website. So I imagine it's going to dominate all 5 days of ETH Denver, is just constant talking about the website. So it's glad to hear there is this beginning of a refresh to it coming.
Oh, I can't wait. And on the topic of the website, the Rocket Pool router was launched. So we now have that option whereby, as the deposit pool remains full, transactions can be directed to secondary markets, and the premium, or maybe one day there's a discount again, who knows, is kind of displayed there to make sure people have all the information they need to make a decision with regards to transactions. And the last point under R&D is that some work has commenced for Polygon and well, I would call it ZK Sync, but I think the real name is ZK Sync, to get the rETH exchange rate over there. So that's a bit of an exciting development, and has some further progress when it comes to L2s for rETH. So in terms of the rETH ecosystem, that leads us on to integrations, of which there are a lot. So we've had Pendle integrating the Aura Balancer pool. That's now live in their yield trading platform. So they also followed up to show the quite impressive volume that that pool generated. So Pendle splits out assets into the kind of underlying token component and the yield component. If you click through to those links, or the first link in the Biweekly, there's a little bit more information there. But essentially, some people may want to limit or manage or speculate on some of these aspects, especially when it comes to the yield being generated by this pool, and that's what Pendle allows you to do. Next, we have Mizo. So they've launched a kind of zero liquidation hyperstaking for rETH, something that was touched on in the call earlier. They subsequently released a facility for RPL with a USDC pool, and both Pendle and Mizo we're going to have on as guests on upcoming community calls. So there'll probably be more time to go into those protocols in more detail on those calls. But we have had, well, I think both, Pendle and Mizo have been quite active in terms of responding to community questions on Twitter and in Discord, respectively. So that was great to see. And then in slightly larger news, we've got MetaMask. So they have integrated Rocket Pool as well as Lido into their front end. And there was certainly a lot of media coverage that came out of that. One distinction is that MetaMask have decided to hook up directly to the deposit pool. So unlike the Rocket Pool staking website, there is no integrated option to route a transaction onto secondary markets, although in their UI they do provide an option for people to kind of click across to the swap functionality over there and complete a transaction should they wish to do so. I think on this topic, the fact that we are kind of considered one of the larger protocols, one of the first to be implicated, is great, and the kind of awareness that comes out of that is also very important. And I think with Atlas coming up, that MetaMask integration will become even more powerful in terms of creating awareness of rETH, driving people towards rETH, because as we're all aware, the supply and demand situation is about to shift quite significantly for Rocket Pool. Then we've had a string of centralized exchanges listing RPL. So there's been quite a few calls and chats with these various centralized exchanges. The RPL token is available on a growing list, and as always, when you're interacting with these centralized entities, should you wish to do so, it's always important that you make sure you do all your research with regards to various fees and funds and everything else before you proceed. Probably worth noting, if you haven't already realized from the kind of volume and order books on some of these exchanges, is that Rocket Pool is not engaging in any market making on these exchanges. So that's something to have a look at as well. And last but not least, we have Aave with a proposal to onboard rETH. So this was also a topic that was kind of touched on in passing earlier in the call. And if you click through, you can read all the details of kind of what's being proposed in there. So another busy section, we've got governance. And Coinbase was even bigger than MetaMask. A heap of media content came out off the back of that. So it's important, I think, to make sure we're all on the same page when it comes to what this means. So right now, they're being proposed as a new ODAO member, and that's kind of where that ends, right? At the end of the day, the existing ODAO members have to vote Coinbase on, and while there is obviously scope for future collaboration with Coinbase, anything kind of more than that is really just speculation at this stage. But based on the conversations that we've had with Coinbase, including their staff popping into trading and some content on Twitter as well, it's great to see that the Coinbase guys are really excited about working with Rocket Pool in this way to promote Ethereum to ensure that it can be decentralized, credibly neutral, and just based on that, it's probably quite clear that they don't see this as kind of a passive role, as it were. So watch this space to see what will come out of this partnership with Coinbase. Two areas where it was covered. Defiant put out a quite detailed article on this, which is worth a read. And then the Bankless guys also mentioned the ODAO proposal. So I'd recommend everyone go and have a look at that as well. Both of these pieces also provide a little bit of, I guess, analysis on what it could mean for Rocket Pool rather than just a statement of facts. So it's a couple of great places to get caught up. And then I saw some commentary about the POAP in trading. There is a POAP that was while we had a VP from Coinbase chatting with us in trading, and I believe it was at that point that the market cap on CoinGecko hit 69, which was pretty nice. And of course, also great to see that the CoinGecko guys were very responsive when it came to updating our market cap earlier. I think that was towards the start of the year when it kind of dropped, but they reverted very quickly. So I have used my very limited Photoshop skills to create a masterpiece. And later today, I've collated a list of the eligible recipients, and I'll be sending them out via DM. Well, I guess first submitting it to POAP, but pending the approval, it'll be sent out. So another one to add to your collection. On the topic of ODAO members, we had one of the existing members launching some new mini pools, which is great to see. So if you click through there, you'll see some commentary from Jasper. And then, of course, if you dig back, it might be a little while ago now, the Discord events list, not the events where we list these Twitter spaces, but the events channel. You can kind of poke around in there and see that happening live. Then we had the first round of the grants and bounties submission, which is closed, and a lot of great submissions that were really worthy of some funding. And I think it's going to be a lot of work for the GMC to determine where the funds will be sent, how they'll be best distributed. But I wish them luck with that. And we also had in the DAO Governance Forum a post from Joe about Rewards Tree Spec V4 that's worth a look. We had a draft RPIT from Valdorf, which was mentioned earlier in the call, on how Rocket Pool should approach self-limiting, which has always been something the team and community have strongly believed is necessary. So it's great to see some work being done to kind of formalize that and put something down in writing. Then we had Superfizz produce a bit of an after-action report regarding the ODAO members upgrading to 1.7.2. So that piece is also available on the DAO site for you to read. And of course, we had Ken, who posted some proposed protocol settings for the Atlas release. So maybe this is another area, Ken, if you're still on the line there, if you had any thoughts to add on this.
Yeah, and you're certainly speed running the update here, doing a great job of it. I'll let you catch your breath for a second. But yeah, we've we're getting really close to Atlas, and one of the key points is that there's probably some protocol settings that we should kind of think about as a community. I'm calling them launch parameters for Atlas. And a little bit later today, I should get just an informal poll up on the DAO forum. You'll already see the post there. But the eventual goal is to get this out, if enough people are interested in it, up to a vote, so we can have a set of key parameters, not only for the Atlas on mainnet, but it would be ideal to actually test those same parameters for the launch of Atlas on the testnet.
Thanks, Ken. I just had a drink of water, so it should be good to continue. I feel like with all of this content, we could probably chat about it for an hour and a half, but I was kind of targeting 90 minutes to get through all of this so that we don't have people sitting around for too much longer. Of course, a lot of these topics are sort of ongoing, so there's a very high likelihood they will crop up again in the next bi-weekly report. We can touch on them in more detail then, or even our Twitter space next week, of course.
Yeah, I was going to comment that on the integrations, I think, one of the interesting things, if we just take a second to step back, is that, what is one of the core missions or the objectives of Rocket Pool besides running validators on the Ethereum network? And I think it's really to produce a market, a decentralized, open source, permissionless, liquid staking derivative, right? And individuals are only going to want that LSD. They're only going to want rETH if it serves a purpose, right? I mean, producing yield on an ETH asset is one thing, a liquid yield, but when they come to choosing us or any of the other LSD providers out here, there's a number of factors that they're going to use in making that decision. And one of those key factors, I think, is product integration of rETH. And so I think we're coming up on a very essential kind of pivotal time where, explaining those integrations, making those integrations, and clearly educating holders of rETH about those integrations is so essential. So I think it's absolutely kind of good that we're doing the update on the website that can maybe focus on that perspective and include that. It was great to see at least one application that kind of talked about trying to document those integrations. And I really, really much liked your ideal, Mav, about inviting some of these integrators onto the community call so we could learn a little bit more about their protocol and how rETH is used. I think those are going to be some excellent community calls coming up.
Yeah, there's quite a few now listed in the other event section in Discord at the very top of the channels list. Some of the times are a little bit different to make sure we can adjust to people's time zones when it comes to the guests. So have a look in there and set some reminders or calendar entries to come along. And then we've got media and marketing. And yeah, as mentioned in the bi-weekly and as we've said quite a few times now, there is certainly this LSD narrative, so to speak, that's been going around when it comes to ETH staking protocols. So the past 2 weeks have been rather hectic in the crypto Twitter world. There's been seemingly endless supply of content about liquid staking in general, Rocket Pool in particular. And if you are interested to see a little bit more than what is listed here, we have our Rocket Pool intern who is tirelessly working hard every day to kind of bring some of this content to light. If you follow their account or scroll down in terms of past tweets and retweets, you get a good overview of what's been going on. And the first one we have is DeFi Llama. So they have started tracking Rocket Pool mini pools in their yield dashboard. So that is an interesting place to have a play around in. I ended up they have like an rETH liquidity page as well, where you can kind of see based on order sizes what slippage would be incurred, which was quite interesting. But I think it's part of this this narrative or the content that's being put out around staking that kind of makes some of these protocols, whether they're DeFi protocols or centralized exchanges kind of sit up and take notice. I think it was always going to happen heading into withdrawals, but certainly it seems that the speed at which it's happened has really surprised everyone. I feel like the next couple of weeks will also have quite a lot more to put in this section. We also saw a Romanian-based company, kind of node operator company called OneNode. They launched a few mini pools. So this is at least the second company that I'm aware of in kind of that part of, I guess, Eastern Europe that has launched, I think it was Dokia Capital a little while ago. They spun up, they're probably around 90 or so mini pools. So now we've had OneNode follow suit. Of course, Rocket Pool being fully permissionless, anyone is free to spin up mini pools at any time. I'm not quite sure if we caught them in events or whether it's possible to identify them, but curious as to whether or not they've used Rocket Hub. Maybe we should get in touch and have a chat with them. Then the first of a quite long list here in terms of the highlights when it comes to content produced about Rocket Pool. CMS, which is a crypto-focused fund, we had one of their analysts produce a report about Rocket Pool. I think this is a really great, relatively concise overview of the LSD sector in general, and then Rocket Pool in particular. Really comprehensive, touching on a wide number of areas. And for anyone who's new, it's probably a good starting point to go through before you tackle Jasper's 50-page masterpiece, which is goes into some of these areas in a little bit more depth. Also, important point to note out is that the analyst has spent a bit of time in one of the threads in Discord, chatting with community members to make sure they kind of had all their facts straight before producing the report. And I think that amount of input from the community reflects really well in terms of the quality and the depth and the level of understanding that the report shows. We also had a crypto YouTuber put out some content. So they did a couple of videos. The first one, more of a general overview, and then a second, which is a deep dive on Rocket Pool. Again, I think that is worth shouting out because it showed that clearly some work had been put into really understanding what Rocket Pool does. So that, I would say, is worth a watch. We had a thread from Gamma. So I haven't mentioned too many threads in this marketing section. It's mostly based on kind of reports or news articles. The list of threads would probably I don't know if there's a character limit on Reddit, but it would be pretty long. I think this one is important to call out. Obviously, we work, or the IMC, to be clear, works with Gamma to manage Rocket Pool's liquidity on Uniswap v3, and they put out some content talking about the really high volume that we're seeing. Certainly far exceeding the requirement for a Chainlink Oracle cough. Again, Eigenlayer mentioned on the call earlier, that's an exciting opportunity for Rocket Pool kind of later down the line, I'd say. And there was an interview that Ethereum that had, and he spent a bit of time talking about the potential synergies with Rocket Pool. Obviously, solo node operators also. There's an opportunity for them there with Eigenlayer, but it really is more on the kind of decentralized side of staking. Then we had Whack Whack Attack and his Launchpad feature. We had a couple in the past 2 weeks. We had none other than Joe and Jasper, and they are also great watches. We had a feature in Loopring's kind of backward-looking Q4 report. The Loopring being a layer 2, and we are in touch with them about potentially doing some more collaboration in the future. We had some plans around joint AMAs and the like, but then I think that was around the time of the whole FTX fiasco. So we just pressed pause until the market settled down, and probably just as well we did, because certainly launching that right now would get a lot more attention. So keep an eye out in that space. We had another crypto fund, Exponential Capital. They announced they had made a couple more RPL buys amongst other assets. And then we had a protocol called CryptView. So that's an option for people to go in and kind of rank or rate Rocket Pool in certain areas when it comes to team and smart contracts and the like. And the final points, I think, are all media pieces. So, yeah, we've got Delphi Digital, Masari, Bloomberg, CoinDesk, Bitcoin Agile, Crypto Globe, Decrypt, Yahoo Finance, and Crypto News. That's certainly not all of the pieces that came out, and I think there might have been one or two in between me writing this and it being published even. And a lot of these media outlets will kind of publish each other's content or license each other's content, so you may have come across it in various other forms out there. But yeah, it's not just the crypto staking world that's getting excited. It's not just the Ethereum world. It's the kind of media at large. So that's great to see. I won't run through the contents of each, but they're free and available there for you to click through if you want to do a bit of reading and get even more excited about Rocket Pool than you probably are already. And with that, based on our slightly delayed start, we've kind of clocked over the 90-minute mark. So it's probably a good point to call this call to a close. Later in the week, we have been invited to watch a Rocket Pool node be spun up by Hudson Jameson. So that is listed in our event section in Discord. I'm not quite sure where the location is, but we will update that as soon as it's available. That's something worthwhile popping along to have a look. It's on Friday afternoon, or at least for me. I don't think it's a great time for people in Europe, but for the US, it'll kind of be later on the Thursday. So come along to that. I'd say since that takes place at the usual time of our chit chats, we probably won't have one this week, but there is there's a lot going on. There's a lot to talk about. So come along to the next community call, which is probably going to be, actually, let me check. It's in the event section, and it is at the later time. So a few hours later, but also on the Wednesday next week. And we have Pendle coming along. So if you want to hear more about the yield trading or yield management aspects of what they do, that's going to be one to join as well. And with that, thanks for joining this Rocket Pool community call. It was great to have Justin on as a special guest, and I feel like there's probably going to be a continuation of these topics in the trading section of the Rocket Pool Discord. So pop along there if you want to discuss any further. Thanks for hosting, Justin, Darren. Not sure if you're still online. Thanks for coming up to chat about a few of the bi-weekly topics, Ken. And yeah, thanks to everyone who's listened in. And we'll catch you on the next one.
Yeah, thanks, Mav. Great job doing the speed run. I'm hoping that next week is a little bit busier for you.
Thank you, everybody. It's been epic.
See ya.
Talk to y'all later. Bye.